Good morning, traders. Welcome to StockCast. My name is Todd Derby, along with co-host James Mason. Good morning, James. How are you doing today?
Todd, good morning. I'm doing well. How are you?
Doing well. Do you have anything planned for 2 o'clock today?
Ooh, it's not what I have planned. It's what the market has planned for me. So,
Jerome Powell, 2 o'clock today, baby.
Why's my freaking head look like it's cocked to the damn sideways?
Shit, looks a cock-sized head.
Whatever. I'm not wearing a hat today.
Let's see how many guys suck up to you and say about how they missed you, how they you've been gone for a couple days. We'll see all the the ass kissing. Which always brings up to my favorite joke of all time. What's the difference between a brown noser and an ass kisser?
What's that?
Depth perception.
True. I mean, I could go through not necessarily comments, but if I knew who I was watching right now, I could go through that list and tell you who has won. Jordan Garcia. Just kidding.
He's already in there. We missed you, James.
All right. So yeah, 2 p.m. today, Eastern Standard Time. Jerome Powell will release the FOMC announcement, and man, I think it's going to be a surprise. I mean, I know people trying to act like a 100 basis point increase isn't a surprise. I think it would be. I think it really would shock the market and send this bad boy over a cliff. I don't know. What's your opinion, Todd?
I disagree. I think the market's already baked in some type of increase. So if it was ever, assuming that 0 basis points is the zero starting point, which I don't think is, and we had 100 surprise basis points, I think the market would drop off the cliff. But I think the market's already baked in 50 or 70. Actually, I read an article this morning from Seeking Alpha, which is a popular news agency, that they've already baked in 75 basis points. So
I can believe that.
So if that's the case, then your theory of 100 basis points is only a surprise of 25. I don't think 25 basis points does the market. And this article also says that if we go 75 basis points, we're at the same Fed interest rate from July of 2019.
But I mean, if you look back at all the charts, which, the stock market, the charts are completely different than the economy. But there is correlation there. When businesses are doing well, you can see it a lot of times in their PPS value or market cap overall. So, while I'm obviously going to talk about this in the context of, like stock charts, keep in mind it is two different things. So let's see, you said when? July of 2019?
Yes.
But yeah, if you do look back though, around that time, let's see, let me just pull up the chart.
Here's something else that I don't know enough about to talk as an expert, but I'll talk more as a layman trying to understand what's going on. I don't trade options, but you've talked about it a little bit, and I've read some stuff recently about how the market makers are pinning pricing of stocks to chew up premiums on options.
Mm-hmm.
So my question is, now, is that a new piece of the tool? I have to understand that what are the high strike points that they're trying to steal premiums?
And everything.
What's the range? Because that becomes part of your TNA.
I mean, they've always done that. That's why it's such a big industry for them, the options market.
But would you say there's more? The answer is yes to my question. But there's got to be more option people today than there was 2 years ago and 5 years ago.
Oh, absolutely.
Yeah.
It's actually the first thing for new traders to start trading.
Correct, because they can take a few dollars and they hear all these success stories of plus 500%, plus 800%, took $100 account and turned it to a million.
And they don't realize how quick they can lose it all.
Correct.
It's just options are brutal when it's going well. Options will make you feel like at the top of the world, but the moment it goes bad, it's all over.
Would you say that premiums on options are the low-hanging fruit for the market makers to steal today?
Oh, it's always been every day.
Okay.
That's the name of the game. All right. So you said July. I mean, obviously, I know we don't have a specific date. But here at the end of July 2019, it does roll over. Now, I don't know, exactly which day we're talking about, but see that range on the SPY was around two. We'll just round it up to 290. So 290, I'll put a little line right here. Just gonna ballpark it. All right. I mean, if we want to talk about like 2019 ranges, I could honestly see the market coming down overall. Now, I don't have a time frame, but overall in a significant market pullback, and that being like the bottom depths of it before it actually bounces. Right there around 290. I mean, there would be some pretty good support around this 230 range, but we might test that.
You think we'll test 290 when? What timeline? What time frame?
I literally just said no time frames.
I know, but that's
I don't know.
I understand that, but you said that, but I think it's important to you really need a time frame to make that. I mean,
you can't come up with a time frame on it. I mean,
well, let me ask you this: you don't think it's going to hit test 290 between now and Friday?
No, absolutely not.
Yeah. So, what about the next
months?
Yeah. So it's a month thing. So it's going to require several catalyst events to test that.
The economy going to shit.
Yeah.
And just a domino effect.
Right.
I think it will put us into a deep recession, like between 07 and 09. And in my opinion, that would be, again, like I said in the beginning of this conversation, the stock market and the economy are two different entities, but there is correlation there. Pull back that much, I think would represent that, the correlation of that in the stock market.
Well, I say we bring Trump back as president, and we really see if he can control the market and rally it. Because
it ain't going to matter who the president is. Like whoever is sitting in that chair when it happens is going to just catch the shit for it. It would not matter who it is.
Who's ever sitting in the chair when it happens will not be president at the next cycle.
God, no. No, not at all.
That's
even if they were able to.
Yeah, something that never. I think the stat is no president has gotten reelected in a down market.
Yeah, especially one that bad.
Yeah.
But yeah, so if we do get that surprise of even 25 extra basis points, with everything else going on overall in the economy, I mean, once those dominoes start to tip over, I believe it's gonna really start to, peel back this onion and start to cause things to unload. That's just my opinion. And when I say that, like not like over the span of days, which I mean, I'm sure we'll have days that it feels like the market is going to go that far down. But big picture, kind of talking here, trying to swing the full thing with options, it would be horrible. Like you would end up with like nice profits, but then as the profits start chopping around, with the PPS and all that, they would start to kill your premiums, and you start erasing those gains just because you were holding it too long. So, yeah,
so do you have a strategy for today?
I'm just gonna watch the whales, see how they're playing it, see what they know. Like right now, while they're still confident, they're not like last month when they knew that the White House was going to talk about the Chinese tariffs and lifting them. They were not that confident. I looked back at it last night. It was well over 3 billion that they were long on, and then they pulled the market up from nowhere. Now they're short right now, but they're not 3 billion short confident. So I think they're at their standard level of confidence, but we'll see. I do think, though, overall, it will surprise the market. And if we break under 389.90, like after the FOMC announcement, I think it's a wrap. Like, I think it's going to just turn over and just start massacring people's 401ks. Really, that's what's going on.
Well, if you look at your 401k now, you'll see you've already been pillaged from the backside already.
Yep. All right. So let's see what else we got. That's pretty much all I'm looking at today. That's, in all honesty, guys, like this FOMC meeting is so significant. So significant. And the trend, I believe personally, the trend that comes after, not like seconds after, I'd say within 10, 15 minutes. Hell, I don't know. It could be 3 minutes. But the point is, like, the trend that follows after, I think that's going to be the trend for quite some time, in my opinion, overall.
I would agree with that. I think that's what we're looking to see. I think today is an important meeting, and the basis points are critical. If it's 75, it's less of an issue. If it's over 75, that's a sign. If it's under 75, I'm not sure what to make of it. I think they're kicking the can down the road, honestly.
What if Jerome Powell was like, you know what? I'm going to have some balls. I'm going to do it 150, 1.5. Because we're not going to be here next month. I'll add an additional 75 onto it.
In one sense, that'd be good, because then we can get it cracked and then get it sorted out.
I think that would just be way too much pressure. It would crush companies. I'm talking about, it'd be devastating. Companies would literally just get crushed financially. Mass layoffs immediately overnight. It'd be a freaking economic disaster. And then everybody would want to hunt him down. So
if you're in his office and you're like, why are we hiring additional security detail?
Yeah, exactly. Yeah.
I don't know about.
Yeah. And why is he just doing this through a Zoom chat?
All right. Yeah, so I think it's fair to say that all eyes on SPY.
Hey, Bitcoin also, I wouldn't be surprised if Bitcoin doesn't go down with it. Just be prepared for that, guys.
For all you Bitcoin holders out there.
Yep. All right, everybody. So it's going to be a wild day today, around 2 p.m. Eastern Standard Time. The market is going to be overtaken by Wall Street algo. It's literally going to go in both directions. And then it's going to finally decide. Like, it's going to smoke a lot of people. So, hey, have a plan. If you end up on the losing side, don't keep throwing freaking money at it, because it's probably going to be the trend in the end. Just
one thought I'll have today is that, and again, I have a small position, so I can handle a several point hit. But if you have options, and at any time you're in the green and it's been choppy, I wouldn't be afraid to take a small win and protect your capital, and so you can trade tomorrow.
Solid advice, Todd. Solid advice.
Not advice, not a financial advice.
All right, everybody. We appreciate y'all tuning in today. Again, it's gonna be a wild day in the market. Be prepared for it. So other than that, y'all trade safe, and we will see y'all in the next one.